Hello folks, Alibaba will be reporting its Q4 earnings on Tuesday morning before the bell, and I think it's going to be a positive one. In fact, I just bought more Baba shares today in anticipation. In this video, I want to talk about what the market is expecting in terms of revenue and earnings, and my reasons for buying Alibaba before earnings. Finally, I'll give you my predictions for what Alibaba's share price will do after the earnings report. And stick around to the end because I'll give you my reasons as to why I think Alibaba could finish at $100 by the end of this week. Alright, so the market is expecting EPS of $1.42 and revenue of $30.38 billion. This is in comparison to last year's EPS of $1.48 and revenue of $28.78 billion, which means that the market is expecting a lower EPS but a higher revenue compared to last year. So that's market expectations. Let me now give you several reasons why I bought more Alibaba shares to add to my existing position. The reasons are the Chinese economy is recovering, Chinese and Hong Kong stocks are rebounding, and finally Alibaba is trading at a rock bottom valuation. So in my last video I explained how Alibaba's fortunes are closely tied to the Chinese economy. Not only does its e-commerce business dominate the Chinese market, its cloud and financial businesses like Alipay are also dominant in their respective industries. So we can assume that if the Chinese economy recovers, so should Alibaba's fortunes. Manufacturing PMIs are a good proxy for an economy's well-being. If this number is above 50, it means there was an expansion in the manufacturing sector compared to the previous month. As we can see, the number has consistently been above 50 since November, which means that Chinese manufacturing has been growing for over 6 months now. And since China is still the world's export factory, continued growth in the manufacturing sector should filter down to the consumer. Indeed, we see that inflation growth in China bottomed out in January and is starting to turn positive again in recent months. This is good for stocks like Alibaba because it means that the Chinese consumer is spending more, which means higher revenues. Another reason why I bought Alibaba is because the Hong Kong and Chinese stock markets have bottomed out. This chart is a comparison of the year-to-date performance of the CSI 300 index, which is a Chinese stock index, and the Hang Seng index, which is the main Hong Kong index. We see that both are up significantly year-to-date, with the Hang Seng up more than double digits. In fact, if we examine the Hang Seng on its own, we see that it's gone up more than 27% since it bottomed out in January. I'm pretty sure that qualifies as a bull market. Click the like button if you agree. Anyway, so what does this have to do with Alibaba? Well, Alibaba forms 8% of the most popular China ETF, which is ticker symbol MCHI, and as you can see, most of the top 10 stocks in this ETF are listed in Hong Kong. So if institutions want exposure to Hong Kong, they will most likely buy something like this ETF, which means they're also indirectly investing in Alibaba. So to summarize this point, Chinese and Hong Kong stock indexes doing well is great for Alibaba because a rising tide lifts all boats. My final reason for buying more Alibaba is that it is still ridiculously cheap. Look at the price to sales ratio of Alibaba over the past 5 years. As you can see, the current price to sales ratio of 1.47 is at the lower bound of this valuation range, meaning it's more likely to rebound than to go down further. And using the previous point of a new bull market in Hong Kong stocks, Alibaba is likely to experience multiple expansion. When I say multiple expansion, I really mean valuation expansion. You could use any valuation metric like price to earnings or price to sales like I've done so in this example. All of this means that if the Hong Kong stock market continues to go up, Alibaba's price to sales ratio could expand to 3 or 4, which is at least a doubling from the current 1.47. And this in turn means that Alibaba could be trading at double its current share price even without growing its revenue. That is the beauty of a bull market. We get valuation expansion in pretty much every stock. So it's almost like Alibaba is getting a free ride. Alright, so we've established that Alibaba is very cheap, but what's next? Where is the share price going to go? Let's assume the stock price finishes at $83 on Monday. Then on Tuesday, if we get a good earnings report in the morning, the stock might go up 20%, which basically gives us $100. If the earnings report is sort of good but not great, I think we will get a 5% rally, and then if the broader market continues to do well for the rest of the week, Alibaba can still get to $100 by the end of this week. However, if the earnings report is bad, Alibaba will probably fall as much as 10%, but how it behaves after will be crucial. Is the recovery swift and on high volume? Then that's a positive sign. But if it goes down and continues to go down below 70, then I would start to get worried and look to cut my losses short. Hopefully though, it won't come to that. In addition, my game plan for the next 2 weeks is if the share price goes above $100, I'll probably buy even more. Why is that the case? Because if it gets to $100, it becomes more likely to reach my intermediate price target of $150, which I talked about in my previous Alibaba video. I also gave my long-term price target in that video, so please go check it out by clicking the button on the top right corner. By the way, this isn't financial advice, this is just my speculative opinion only, but I think that we are going to go up 10 to 15% on Tuesday. The markets feel really bullish right now, and I have full confidence that management will deliver the goods on Tuesday morning. Anyway, that pretty much wraps up this video. If you haven't already, please click the like and subscribe button to get more Alibaba videos. Thanks for watching and see you tomorrow.